Hey everyone, welcome to the PivotBoss Closing Report. I am Frank Ochoa, aka PivotBoss, and this is analysis for the upcoming trading session January 5th, 2016. We had our pre-market report this morning, and it's always good to start the year with a fantastic idea for a buy opportunity in the ES. This morning we had our pre-market report, and it called out 1981s as the area to buy. That was the CLVN right here in the composite profile. That was the area where I mentioned that when price gets into that zone, that's where bulls would like to come in, defend, and for a shot at returning price back toward the HVN at 2072s and perhaps to the top of the range. Obviously, we've been in a clear trading range over the last several months, and until we see expansion from this range, responsive traders are going to continue to fade the edges of the range for a shot at moving price to the opposite side of the range. So 1981s was our area to buy and defend. Price got into 1980.25. So just 3 ticks lower than our buy opportunity, and then rallied a solid 30 handles off those lows. If we take a look at the intraday time frame for the ES here, you can actually see how impressive that reversal was. We had the first bounce here off of these 81s that came in. Price dabbled, popped back above a little bit, and came back, formed a higher low right off of the 85s, and then rallied into the close into 2010s. So a significant rally, clearly enough room there to scale out, get to break even, and take some profits along the way. If you're a swing trader, those 1981s could bring you all the way back into 2072s. But after a bounce of this magnitude, you want to take some off the table. You want to get to at least break even, if not to a profitable position. You want to trade from a position of strength, and taking some off the table clearly does that for you. If you want to drop into the footprint chart a little bit, you can actually see what these 81s look like. And this is very important right here. You see all of the red right here? All of those are sell imbalances. About 6, 7, 8,000 contracts worth of sell imbalances. So it was clear that sellers were trying to break below those 1981s, but it was also evident that absorption was being seen. Responsive buyers came in with a heavy hand, cleaned up all of those shares, and all of those sellers that came in were forced out of their positions, and a short squeeze ensued. So that's what it looks like when you see price trying to bang through support and fails on a big imbalance. Those sell imbalances right there were clearly turned away, and what you saw was a short squeeze into the close. So a solid move nonetheless. If we drop back into the daily time frame now, the idea here moving forward would be for any pullback likely into 2000 or maybe even as low as 1991s could be seen as a retest buy opportunity for a follow-through into 2072s. Any push back into 81s could overtake that support, and again, a breakout from this range could spark the next major wave of expansion. Taking a look at crude oil now. Crude oil, not much to say here after the first trading session of the year. We talked about price trading within this very narrow range here. This narrow range basically from the 35s on up to about almost 39s. That range right there, trading around composite VPOC of 36.88, just implies that there's going to be more chop ahead. There's no value, there's no edge in this zone. There's only acceptance, and when there's acceptance, you get chop back and forth. So right now, it's clear that the market is testing both sides of that range. Eventually, we will see expansion. Given the current downtrending market, any bounce is likely to be seen as a selling opportunity for a continuation to the downside. Taking a look now at gold futures. Gold looks very similar to crude oil. Very clear trading range here that has developed from 1045s up to 1085s. Very similar to crude oil. It's chopping around the 1070 half composite VPOC. Not a lot of edge in that area either. It's best to avoid the chop until expansion occurs. This one is also trading and attempting to hold below the 1077.90 key level there. And if prices can continue to hold below that key level, the expectation would be for a move into 1009s. Now, given the fact that lots of bears have come in to defend prices between 1077 and 1080, there is increased stops, buy stops above that area. So if price pops above 1085s, we could see a short squeeze ensue, which would take us all the way back to 1169. So that's why I say it doesn't matter which way we go. We could see significant expansion ahead, but right now it's safer to avoid the chop as long as price is moving and trading around that 1070 half. Now taking a look at the NQ in a daily time frame here, this one also bounced off the bottom of our key range here. We have 44.49 as the bottom of the key range. I talked about the CLVN at that area and how price, if it pushes into that area, look for OTF responsive buyers to defend. That was clearly the case. We got a little bit more movement down below that area, but eventually those responsive buyers came in force and rejected price back up. This is important because price went offered at the previous month's close here at 45.87s. And then now you see the previous month's low. All prices below 44.71 there were rejected and price closed back above. This is an indication that if these prices below the previous month's low are rejected, that would imply a return back across the range toward the previous month's high at 47.33. So that's your swing outlook here. If price pulls back into 44.71, that could be a retest opportunity to buy and defend for another round of strength. Eventually, we're going to see a breakout from this major range. That's going to spark the next 2 to 3 month move in terms of expansion. But for now, look to fade the edges within the range until expansion occurs. All right, that's it for now. We'll see how this thing plays out heading into the rest of the week of trading. Good luck and trade well.